Welcome to another episode of StewTube. Well, guys, the Bulls have managed to get a breath of fresh air with this much welcomed bounce, so I want to go over a few things, a couple things I'm watching for, and as well just kind of, also things that I want to be both for entries as well as things to be cautious of. I know I have been extremely bearish about these markets for quite a while here, so I want to just talk about a couple different potential scenarios ahead of us. To start things off, if I could just get a video audio check, you guys can see my charts clearly, you can hear my voice clearly, don't sound like a robot or anything like that. Let me know in the chat if that's all good, and then I'll get started. Basically just killing 20 or 30 minutes here. I don't think it'll be a very long one, but we're going to take a look at a few different things, a few different time frames. Kind of a few things that have been happening with this volatility recently. But yeah, do me a favor, let me know if you can hear me in the comments there. And then we'll go from there. Ah, perfect. There we go. Thank you. Thank you. Yeah, and just to let you guys know, there's like a 20 or 30-second delay. So if I'm sitting there in silence, that's why. Great. Thank you so much. Yeah, like I said, guys, this is obviously some much welcomed price action to the upside because it's been absolute carnage recently. For those of you guys who have been tuning into my live streams lately, this will have not caught you off guard. In fact, hopefully you were able to profit on the way down like I did. This was very easy to predict, in my opinion. I know it's hard to keep your emotions at bay, but as far as a structure in the chart goes, this was a very just beautiful price action. People who are saying this is manipulation and all that kind of thing, it actually, if anything, if we would have broken through, I would have considered it more so manipulation, because all we had here was this most recent structure break. Obviously a bearish one because it's a lower low. That's something we look for in a bearish trend, but people decided to ignore it this time. So we get that lower low, then we pull that Fibonacci from our lower high down to our lower low, and where did we get rejected? Right in that 786, 886 fib pocket, which I can't stop talking about. I talk about it pretty much all stream, every stream. So that's why I was bearish at that point. Well, everybody had a perfect sell the news event with Trump coming in to give that speech about crypto. I mean, this is what the impact that speech had on it, right? It was very much a buy the rumor, sell the news event. And to see that so many people got blindsided right at resistance by their own emotions, it is unfortunate, but that's how trading always is. It always feels like this price action should be different for whatever reason. There's always things that are going to be bullish as well as things that are going to be bearish in the news. And basically when that price action happens, there's going to be an article that comes out, tells you why it happened. It's all too late. It does not matter what happened. All that matters is the structure of the chart, because that's how we make money. And yeah, so I was calling for this big dump. I was calling for around 58K was my target. And my reasoning for that is just, if I go with that Fibonacci I was talking about, that was my target. It was actually down closer to 57.5, but I like to front run my fib levels a little bit. And as well, just looking at that from the opposite end of things, that's just looking for my 786, 886. So one thing I was very clear about this, guys, is that was my target. That 57.5, 58K, that was my target, but that was not my bullish, my bullish like FOMO long in kind of a thing or anything like that, right? That was just my range target, and I talked about some very serious other targets to the downside that I'm, hoping to catch on a running position type of thing. But this was my initial target. That was hit, so after that, anything can happen. What ended up actually happening? We actually set another lower low, you guys. So yes, absolutely, I see reasons why we bounce from here, and we do see some very nice levels once again. But you know damn well people are going to be getting FOMO at that exact same Fibonacci box. Now that, I mean, people can argue with me all they want, and you know what? As soon as the market changes structure and we break those basically all-time highs, not quite, but as soon as we break a lower high, I will feel very different about this market. But at this time, we're just setting lower low, lower low, lower low, lower high, confirmed a new lower high with that price action this weekend. So now I would basically just be looking at something like so. If it's the same setup to play out, and again, things don't happen 100% of the time, right? I mean, maybe this is the one that fails, but so far on this trend, it's been a thing of beauty that we get that lower low. I pull a fib from the lower high. I start looking for rejections in this level. That would range basically from 65 up to 68,000. I think that's very fair game to end up getting a bounce to that level. Now, I don't know for sure if that's going to happen. I'm just saying that that's very much on the cards. And if that does happen, you know that people are going to be getting FOMO at that level again, saying that bears are getting wrecked. You're going to see the long-short ratio start to build as we trade into resistance. You see it all the time. People love getting bullish at resistance, just like what happened right here. So that would be totally normal, right? After a structure break, everyone always thinks that, you know, after that structure break, okay, it's bearish, time to start shorting. No, it's bearish, it's time to wait for a retrace and then start shorting. Like this whole move, you guys know, I was actually short-term bullish on this price action just because we had a nice setup down here. We had a nice 786 fib right here with a nice big bullish divergence. And that's kind of what I'm looking for right now, you guys. The fact that we broke that lower low structure, yes, it actually confirms that I am still bearish on the trend. But the thing is, I'm very open to the possibility of retracing now, just like we did every other time on this trend. It doesn't have to happen as aggressively this time, just because I think the fact that we keep setting those lower lows, yeah, you know what, maybe the floor just gives and we absolutely collapse. But that was some very aggressive selling that we had. So, I mean, some sort of relief would just make sense, right? But basically what I'm looking for right now, just because on that sell-off, it was so aggressive, you guys. This is one of those times where just like the pattern that I was watching for on the weekly chart, which I've showed you guys a million times, I was looking at a overextended RSI divergence kind of a thing. And that's basically what I'm looking at here on the opposite end, just looking at it in a bullish way, right? I would love to see this big overextended bullish divergence with a pullback towards my 786, 886 fib pocket. I would love to see that right now. Everybody would start getting bearish again as we get near support, just like it always happens. I would actually be quite bullish in this scenario, and I would be looking for longs personally. My reasoning for that is not just that it's pulling back to that Fibonacci level, but again, with that RSI divergence, but also if I just remove my indicators here just to make it a little bit more clear here. And it was actually the 1 hour I was watching. I was waiting for some sort of a structure break because that's basically what triggers a STUBER fib setup for me when I'm looking for trade setups on shorter time frames. So same thing when I'm looking at something like an hourly, right? Basically the way I see it right now is we had this low and we did in fact have a lower low, which means we have a confirmed lower high. So I'm basically going, you know what? Here's my resistance then. That's the line in the sand for me that as if we close candle bodies above that, it's time for me to be bullish for a little bit. The only thing with that is, again, after a structure break, it's totally normal to pull back. So I'm not really looking at FOMOing into a position up here, but I would like to come back and test these levels down here. Basically down here at around 50.7 down towards 49.8 kind of a thing. I would love to see us bounce or get down to that level and get some sort of a bounce. If it gets invalidated and we just drop right through that level, go something like this and just absolutely dump even past my 115 here, but even breaking our local lows, watch out for some sort of a fake out with our current lows. But other than that, even with that, I would more so think that, even if we got a bounce at that point, again, it would just be kind of some sort of a lower high and then continuing on the trend to the downside. But if we can set a higher low kind of in this area, that would just show a lot of strength to me. So I would love to see that. But again, happy to be invalidated as well. I was having a blast trading the downside. I find the downside very fun because it usually moves very fast. And as long as you're a trader and you're just trading the charts for what they are and keeping your emotions out of the way, it was a great weekend. And that's another thing. A lot of people don't like trading weekends. That was the most profitable weekend that I've had in probably a couple years. So, well, maybe a year or so, but it was great. It was great price action. It was performing it was actually very healthy as long as you were able to see it for what it was. There was so often where we just couldn't break our trend and structure, right? Like lower low, lower low, lower high, lower low, lower high, lower low, lower high. I mean, the dumping it carried on very basic market structure, but every time we got some sort of a bounce for more than 5 minutes, you'd see all the influencers again. And not all of them obviously, but the ones who specifically don't even show charts or anything, but they just see a little bounce of, oh, it's bounced for 5 minutes, the bottom is in. No, that's not how this works. With this structure here, I'm actually finally able to accept the fact that, hey, maybe that's it for that dump for now. That I have very low targets in my mind, but those do not have to happen. I play this market swing by swing. There's people saying, oh, you're bearish, you're going to get wrecked, you're going to miss the whole bull market. No. I took a long position this morning. It played out great. I have no problem trading this market either direction is my thing. I just want it to be volatile, and I don't care which way it goes. The people who aren't able to adapt to the market conditions, those are the people who get wrecked in the market, right? And I mean, you can actually watch it on oh yeah, look at that. We're starting to drop here. Yeah, I would basically love to target these levels down here. If we can get that push down to these levels, that's where I'm interested in, starting to look on lower time frames. That's where, this is a 1 hour chart pattern, and that's, realistically more so what people should probably trade. But when I look at the 1 hour, I still want to zoom in on the 1 minute when it comes time to execute, because I want to see some sort of a micro-analyzed lower high structure gets broke on the 1 minute or something. Just some sort of confluence around these levels. So I usually don't like setting blind orders. I personally like to wait and see how reactions are. With the 1 minute, it's a little harder to do that, and a lot of times, I mean, the signals, I guess when you get a structure break, that's kind of your signal, so you can set them relatively quickly. But when I'm trading longer time frames like this, I like to be a little more picky with my entries and just kind of zooming in and seeing how these levels are reacted. So yeah, if we start trading down at these levels, that's where I'm hopping into the 1 minute, like I normally do anyways. But they're more heavily on my radar, right? I'm gonna make a box at that level, just so that if we start getting to that level, I just know that I should think about being bullish. Not necessarily. We'll see how it's reacted with. But I would be interested in looking for longs down at this level. But yeah, we're going to have to see what happens. Because, I mean, right now it does look like we're kind of pushing down to that. One thing that I'd be looking for right now, we actually had this little double bottom here. Let me just remove a few things. You can see that where we bottomed out right here, we got one of those RSI divergences, right? I did take a little scalp long at this point. I closed a third of it and then the rest got stopped out. That's totally fine. But basically I was looking at this as a bit of a double bottom. Just kind of looking to start laddering into my position, getting into it around the 786. 886, I ended up getting into it about here. I waited for a green candle close on the double bottom, saw this bullish RSI divergence, took a long, and then, obviously my target was hit relatively quick, right? Basically, actually very quickly. I think it was just within a few minutes, basically, I ended up starting to take profits on that one. But then, the rest got stopped out at break even. So whatever, it is what it is. I didn't want to keep it running too much if I was planning on doing a stream, because it's easy to get sidetracked. Before that, the previous STUBER fib I looked at, I actually never caught this one. It happened while I was driving across town. I never did see this until I got home, and basically as it was starting to nuke, it was like, I missed my entry, whatever. It is what it is. But this was just a beautiful one. I mean, as soon as it started dumping, I was like, oh, I know there's a STUBER fib there. And yeah, sure enough, pulled from these highs back here down to where we had bottomed out between the two. That's exactly where we get rejected, right? So that's just basic structure, basic price action. Just so often you get those structure breaks and then you pull back to those levels of the swing. So, and yeah, it obviously, I think within like 3 minutes this target was reached. So that's where I mean, like, the downside's really fun to trade, you guys. If you got into a short up here, yeah, you know, I'd probably be looking at scaling out of my position, you know, a quarter to a half of my position at the range target, and from there you hope for the runner, right? Like I said, I'm not in this trade, but that's just a very classic STUBER fib setup right there. Holy, the chat is filling up. Right on. I honestly had no idea there was a bunch of people here. Welcome, guys. Welcome. I hope you're all doing fantastic. Got a bunch of the MDX ALGO legends in here. Welcome, my friends. Welcome. Sam, nice to see you. Long time no stream with you, buddy. Do I look at order flow and naked points of control? Not so much. I know a lot of people do trade those and very well, and I know they're very strong confluence. I kind of developed my own strategies, and it's just kind of, it is what it is. I'm sure I could start adding those points of control and stuff like that, and then finding those lining up with STUBER fibs. That would just be additional confluence, right? So, I mean, choose what works for you. My thing is, if I start throwing too many things onto my charts, I start getting a little chart blindness. I have a few strategies and a few indicators that I really like to use, and yeah, that's basically what I stick to. So like right now, yeah, even though, you know, I am short-term bullish, I should say mid-term bullish, because short-term I'm actually bearish. I'm really hoping that we end up getting pushed down to these levels. I'm really hoping this little range doesn't stop us. I hope we kind of blast right through that and just end up down here and see what happens. But yeah, I'm more so hoping that we push to the downside right now, and then I can start getting bullish near support since we had that structure break, basically. And, you know, just to confirm that, so far we do, you know, the downside was the direction to play while we have, this is where I like to use the indicators for confluence, right, guys? We have the sell signals trending to the downside. That was additional confluence that, hey, look for STUBER scalp setups to the downside, right? So this one, just again, we had that lower sell signal. So even though we got above these signals, they're still trending to the downside. And that's where I'm still looking for bearish entries, basically. Now we have these lower high, lower low signals. This is where, you know, this is one strategy I've been talking about quite a bit, is I like to pull Fibonacci's off these levels. So if we know the trend is to the downside, I would like to look for this, this type of a setup. You know, if I could kind of short in this area, starting to ladder in around the 786 and then go a little heavier up here, bringing my average entry up a little bit. That's kind of the setup that I like to look for using these. It doesn't always happen. Obviously, we might just get shut down, set a new lower low right now. I don't get my entry, whatever. That's trading, especially on the 1 minute, right? I'm not gonna be too upset if I miss a trade setup and have to find one later, kind of a thing. But yeah, that's a strategy I've really been liking lately. And you know what? If it gets invalidated, if we just end up, you know, I get my entries, get into a position here, and I end up getting stopped out up here, that's trading, right? No strategy is perfect. No strategy is going to win 100% of the time. But yeah, that's basically a typical setup, just a very simple one that I use with these indicators, as well as just kind of mixing it with Fibonacci's, right? Because Fibonacci's basic market structure and Fibonacci's is basically my go-to when it comes to trading. And from there, I like to throw on some of my favorite indicators to just kind of get a second opinion. I think a lot of people misuse a lot of indicators, and they hope that indicators are totally going to fix everything that they're doing wrong with trading, and they're just going to get some blind signals and take them, and that's going to be it. There's a little more to it than that, and honestly, I just think market structure first, basically every time for me. And after that, like I said, those second opinions, like even as I mentioned, just seeing which way the trend is going by seeing signals, hey, sell signals to the downside, buy signals to the downside. That's just added confluence for me, just a little bit added confidence to any position I'm going to take to the downside. And then, you know what, if it gets stopped out because the trend changes, then so be it. How great would new lows be? Oh, absolutely. I'm all for the idea. Like I said, I'm going to start getting bullish at these areas down at support again. But if we just blast through and I keep playing the downside after that, I'm totally fine with that. Like I said, I was expecting some much lower targets, but that's not right away is the thing. Like I said, markets pull back, right? After structure breaks, markets pull back. They don't just go one direction. I know everyone wants to just short into support as hoping for a breakout, just like they like to long into resistance, hoping for that breakout. Just generally speaking, that doesn't always work out the best. And it takes time, and especially when, some of the stuff I was showing you guys and why I was so bearish. Let me just load something up here. Why I was so bearish on the market as a whole. That's based on a weekly time frame. That shit takes a long time to play out. Like, so many people were telling me I was wrong as soon as we started bouncing, even though we had this structure break. Even though I was very vocal about the fact after we broke it and we set that 4-hour bullish divergence, I was aiming for this level. Like, that was my target. I was bearish, but I had a target way up here. And that's one thing a lot of people can't separate from, I guess, how they look at the markets and how people are trading them. Just because I'm bearish right now does not mean we're going straight down. That's not at all the case. SPX closed bearish. That could be it for a bounce. I haven't looked at the SPX for a long time. Actually, I think last stream I did, but I haven't been keeping an eye on it. It kind of came up, almost filled that gap. There's a lot of gaps up here. Yeah, I gotta zoom out. That's the 1 hour. The DXY, I gotta zoom way out. Or sorry, this is the S&P 500. Sorry. Yeah, I haven't looked at the SPX for a long time. Something. Let's just see. Where does this give us? Yeah. That's kind of funny, hey? I mean, yeah, maybe that's it. Maybe the S&P is about to bounce from there because it did technically hit what I would consider a target. It got there very quickly and it looks very scary, but I mean, that is basically a 786 just front run very slightly. RSI getting to that oversold level, not quite there. And honestly, the thing is, it can go beyond that. I haven't watched this very much. It really hasn't gone below too much. Like I said, I haven't followed. Oh, apparently, I had a chart mapped out a long time ago, and look at that. Wonder when I mapped that out, probably way back here in 2022 or something. Yeah, that's probably the last time I looked at it. So interesting place to bounce there. If I was in a short against this is where I would be starting to take profits, right? Because we hit my range target. I would still be hoping that the position continues running. That's why I never close a full position, just in case it does something like this. Then I want to still have part of my position open, but this is definitely where I want to start taking profits, because if that's where I'd generally be looking for a long position, if I'm in a short, I should probably be taking some profits there. As far as the 618 goes, I myself just don't look at it all that much, just because I find that so often when the 618 gets hit, it's more so like the candle bodies start respecting the 618, but you'll still get a wick down to the 786. So that's why I took off a couple other fib levels off my chart. I think the 618 is still a strong level. I just like going for that tighter invalidation, and most of the time I find that if we break the 382 basically, there's a good chance we're going down to the 786 and maybe even a little beyond. So just to tighten up that risk reward, I like to go for that. And also because I'm usually trading shorter time frames, if I don't quite get it, if it gets front run and I don't get into my position, I'm probably going to see another one within a couple hours, 2 or 3 hours. You see them all the time on shorter time frames. So I'm not, I would just rather go for those tight entries, just a little lower, or on the short side, a little higher, right? How many trades per day on average would I take? It depends. If I get into a nice running position, then only one. Like this weekend, I was basically in one trade for a couple days. Actually, I think I ended up taking two. But like if it's a day where we're in a tight range and we just keep bouncing between STUBER FIBS and I happen to be like playing video games and have the other monitor going or whatever, then maybe I'll take like 5 or 10 trades. It totally depends. Really depends on the market conditions. Like if it's chopping sideways, then yeah, you're going to be in and out, especially if you're looking at scalping and you're just, taking profits on part of the position and then setting or adjusting stop loss to break even on the rest. And then the rest gets stopped out because it's ranging or whatever, then you know what, so be it. But yeah, sometimes that ends up being like, trading the 1 minute, all of a sudden, you might be in and out of a position within a couple minutes kind of a thing. It totally depends what the price does. Generally speaking, it's a little longer than that, but when markets get really volatile, sometimes they just sometimes you will see a move that goes straight down here and then the next 1 minute candle hits that range target. And a lot of people would think, oh, it hasn't been long enough, I'm not taking profits. That's not really how it works, right? Your level was hit. Sorry, you're in and out of a trade really quick. Oh, too bad, it worked out too well. So, when you get in those conditions and you start getting those, yeah, sometimes you end up taking a lot of trades. But that, honestly, guys, trading the 1 minute is not for everybody, right? It can definitely lead to over trading, revenge trading, over leveraging, all that kind of stuff. And it can lead to a bad spiral and blow up your account. So understand what works for you, right? I'm actually less comfortable trading longer time frames because I just kind of panic that, hey, what if something happens while I'm not paying attention and it does actually affect the markets? I just feel like there's a lot more time for something like that to happen. Consider it a black swan event or whatever, even if it's a mini one. That just kind of makes me uncomfortable. So I love to enter these positions where it's like, usually within, 10, 15 minutes, I have a pretty good idea, or I've already started downsizing my position, or I just, stuff like that. So I personally like trading the smaller time frames, but it's not for everybody. Yeah, thanks, Sam. Smash that like button, guys. If you guys do appreciate these live streams I've been doing, both on my own YouTube channel and as well, guys, I don't know if all of you guys are aware, but I've started doing live streams on the Financial Summit as well. Like Bitcoin major drop, Bitcoin going to 58K. We obviously went way past 58K, but that was laid out well in advance. So anyone who would have seen these live streams would have been aware that that's kind of what I was looking at. So been having a lot of fun with that. I'm going to be streaming with them more often moving forward. So yeah, definitely give them a subscribe and watch for me there as well. But yeah, also my own YouTube channel, obviously. And guys, this just goes, a lot of people, this is something I kind of posted about, is a lot of people were telling me when I was bearish that I was wrong. You're going to be wrecked by being bearish. You're going to flip bullish too early or too late, blah, blah, blah. Real traders adapt to current market conditions. And this is a perfect example. As I was standing by a very bullish stance, basically. I've been basically a moon boy for the most part for the last year and a half. Obviously I had times where I was looking a little more bearish on the short term, but this was a June 13th, I believe it was, where I made this video, the Bitcoin chart nobody wants to see. And that's basically where I flipped my bias. And that was because I noticed that we had this structure break. Let me just delete this here. Basically I was looking at this as our structure break because we lost the candle body lows there. Sometimes what I do is I'll actually remove the wicks just to make market structure more clear. You can tell that that's a higher low there, and we actually end up losing it. That's basically my signal for look for a STUBER fib setup. If this was any time frame other than the 5 minute, that's what I would have done, right? I would have started chasing the price with my Fibonacci. There's where we bottomed out, and just waiting until we hit that 786, 886 fib pocket. And look how accurate that was. From market swing top down to the bottom, we filled that absolutely perfectly. And when I saw this rejection, this is where I got very bearish on the market, and not a lot of people wanted to hear it, and that's why I made that video. Nobody wants to see it, and I just remained bearish the whole time. I know a lot of people who make a lot of videos who you know, every single day it was like, oh, Bitcoin's bullish, Bitcoin's bearish, Bitcoin's bullish, it's bearish. I was very firm that you know, I was bearish, and although I did make it clear that, you know, there was certain bounces I was looking for, I really stood by that I guess idea, and I still feel that way a little bit. I still can't help but feel like we are going to go down a little bit lower, but again, I really do think that it makes a lot of sense that we would see some sort of relief, because I mean, the market just got hammered this weekend. Oh no, did I accidentally delete a bunch of stuff? Whoops. Whatever. Either way, on the 4 hour here, like this, that is a lower low. Very basic market structure stuff, you guys. So just, if this was a 5 minute chart, or a 1 minute chart, this is where I would be looking to short with this current setup. The fact that we broke these lows, lower low, I'd be looking for that fib pullback. And I know on a longer time frame, and it always feels like, no, that can't happen on the longer time frame to Bitcoin. We can't see these low numbers over here ever again. It can happen. And anybody who thinks that, you know, Bitcoin dropping 30% is maximum pain when it comes to crypto, that's just it's not. Bitcoin can drop a lot further than 30%. You know, I'm going to enter a little bit of a scalp short here. I'll take one. Why not? I don't know if it'll hold, but I'll stop somewhere up there. Just in case this is going to push down here. I don't know if it will or not. It kind of looks like we've broken that sell trend here. But let's just see if this does end up holding out. And I should know basically in a few minutes if this trade's going to work out or not. It's looking a little stronger than I'd like, but it is what it is. We'll find out soon. Let me catch up on a few messages here. After 10 years, your best indicator is your gut. You're lucky. Most people's gut steers them wrong. Oh, yeah, we might get stopped out very soon here. Basically, if we break above 56.2, then I'm out of this position, and I'm just going to wait and see what happens, because at that point, I think it's possible that we find some sort of a bullish pullback instead. Even at this point, I don't like that we broke this lower high already. That's just showing to me that there is some strength from the bulls right now. But there's no point in me closing it when we're so close to my stop loss already, because again, it's just a scalp, right? Yep, and I'm out already. Well, that was fun. But again, that's why I like the shorter time frame, because I know really quickly if it's going to go well or not. At this point, since we broke this little bit of structure here, something that I would consider would be looking for a pullback, something like this. Because again, guys, it's not going to work out every time. But what matters in trading, because everybody loses trades, what matters is keeping them controlled. When you take a loss, make sure it's controlled. There's a lot of people who trade without stop losses. just try and blind order based on something they hear in the media, stuff like that. Just make sure anytime you enter a trade, basically, you want to know what's the worst case scenario with this setup. Like how much, for one, cross leverage is a whole nother game. I personally have never used cross leverage. I find it dangerous. But like I just use isolated because then I know that, you know what, worst case scenario, because a lot of people think your stop loss is your worst case scenario. That is not true because slippage does happen. It doesn't happen near as much as it used to, but it does still happen. And, you know, I've had that happen to myself personally. And I always share this example because I think it's important, is that I was trading some random altcoin. I can't even remember which one. But basically, I had my stop loss in a 5% profit and that position got liquidated. It was fine because I never throw my whole account onto a trade, obviously. I'm always aware when I enter a trade, what's the worst case scenario that happens here. Basically, whatever I have on isolated margin, that could technically all go bye-bye, even if I have a stop loss that doesn't agree with that, right? So it's always important to just be aware, what's worst case scenario here? What is my backup plan? Bear voice through 2024. Yeah, Sam, you know that basically since, what was it, end of 2022, start of 2023, when I was first streaming, you were in some of my very first ones. And I was bullish from that point, basically down at 15 or 17K or whatever it was. And the masses were against me, but I was full on Moon Boy. And this is kind of the opposite feeling I have on the weekly chart here. I have that opposite feeling where I was so confident in this bearish move. Now I'm not as confident anymore because, you know what, that move may have already played out. Maybe that is all that happened. It's absolutely possible this gets bought back up, but I like to play things swing by swing, so I want to see what happens on the 4 hour basically. Like, it is possible, technically, this structure here on the 1 hour, we did break above that. Lowest point between the two would be here. You could try and find a scalp in here, maybe. What does that look like on the 1 minute? Yeah, see, even if we pull back here, I would not be confident in that short anymore. Just because, you know, after breaking above this little range here, even though it is the 1 minute, take it for what it is, structure changes all the time. Just for myself personally, with using high leverage and stuff, after breaking that level, that's just kind of, you know, to me it looks like we had a low, we set a lower low, but we broke the lower high. So at this point, and also the fact that the auto charting tools agrees with that was a lower high, just added confidence there. And just thinking that, you know, even if we get a bullish pullback, it's just showing that, hey, another lower low, there's our lower low. But I have a feeling, because this is a lagging indicator, right? I have a feeling eventually we're going to see a higher high signal come into play. We'll have to see, because I think it actually takes into account like volume and stuff like that as well with those pivot points. I could be wrong on that. I never helped code them. But yeah, just the fact that we broke this structure here, I'm just not confident in the bear scenario anymore. Even though it does look like we have a nice trend on this indicator, I'm having a hard time right now being too overly bearish, which sounds strange after hearing my last few streams over the last couple weeks here. But just the fact that, yeah, with the 1 hour that we broke that structure, I'm, where was that? Back down here. I'm just feeling like after that break, you know, it's very possible that we just carry on to the upside. Ideally, I want that pullback, dip back to what would be that STUBER fib to get my entry. But the market doesn't give a shit what I think or what I want, and it's going to do whatever it's going to do. So I don't know if I'll actually get my entries down there. It might just take off to the upside. So I'm just a little bit cautious right now, both directions, to be honest. Basically right now, any little bit of scalping I'm going to be doing is going to be small positions, because until we get down to these levels, and it might not even happen, but just for the next day or two, I really want to see us get down to these levels and then see how we react, and then I can kind of decide how much confidence I have in which direction in the market. Right now I'm kind of open to either possibility, right? I see the bullish structure break, but I'm open to the idea that we pull back now, just like the opposite way how I was looking bearishly before, but I was open to the idea of a bounce. Hopefully that makes sense. What percentage in cash am I? I only ended up selling about 15% of my portfolio. Basically, it's the thing is, I'm always going to be bullish on crypto as a whole, but I'm more so, like, me being very bearish, I was more so just changing the way I trade. I was more willing to trade the downside aggressively as a hedge. Like I said, I sold some of my spot bags, but for the most part, I still hold most of my stuff. I mostly ditched some like meme coins and things that I thought were going to be high risk. And, you know, I also bought some on this dip, right? There's a few meme coins that I just took little nibbles at, nothing serious, but, you know, I'm just open to the idea of the market going to the upside for a little bit. Some meme coins might get stupid, who knows? But those are just like, those are the high risk of the high risk. I go very small allocation to those. That's right, cause chart structure don't lie. Except when it tricks me sometimes, like on the 1 minute there. But that's okay. That's trading. The setup was there for what I normally do, and that's why you have invalidation levels. Pulling this fib, this is a little riskier because we have the lower low signal here, but again, just because we have this break in structure. Should I take another nibble if we get down here? I don't know. I'm really hesitant to play the long side until we get down either towards these levels or down towards these levels more so. Kind of hesitant to take any longs right now. You know, it looks like we're going to get this level here. I don't know if I want to take that one right now with the buy signals trending to the downside. Sell signals trending to the downside. I just don't know if I'm confident in that. Four-hour RSI still can't break above 48. Yeah, let me take a look at the 4-hour again. RSI, yeah, like 45-ish. That being said, this is kind of that same thing, right? That's where I was talking about this RSI divergence, being it was so overextended, because there's very specific divergences I look for, and I want it to be extremely overextended, which at the time, this obviously just meant a shit ton of selling pressure, right? It's the strength index. But if we can come back to some of those fib levels that I like to play, and we also get that basically the RSI comes down to this level as we test that level. So we're basically coming back and testing the lows once again, except with significantly more strength. That's basically how I'm reading this divergence here. So that's why I would love that to happen. That's what happened on our lows back here. But it does not have to happen again, right? I mean, this was a perfect setup, and yeah, I called the bottom there, I think within 20 bucks or something like that when I ended up taking along there. But again, it was just that very specific setup. It was the bullish RSI divergence with that Fibonacci pullback, and I would really like to see that here again. I don't know if it's going to happen or not, but it's just something that I'm really hoping for and watching for basically at this point. When you get stopped out and it moves in your direction. Oh yeah, in this setup here. Well, either way, I'd basically be at break even again. Again, it's totally normal to break structure like this and then pull back. So even, even if that's short, or even if we do end up tumbling to the downside here, just the fact that we had that bullish signal, I just wouldn't have been comfortable holding a short either way. Sometimes it's best to just, if you can keep yourself with a level head and just cut your losses, then sometimes it's worth it. So I want to see if there's any of those signals on any other time frames. Actually, let's see what else is around. Got this higher high signal, got a sell signal. This is a higher sell signal, so a little bit of conflicting stories there. What's the 3-minute looking like? Oh, we have a lower high signal up here. And that would make more sense too for a bigger move, just because that's basically where this one got shut down in the STUBER fib, right? It was on the 1 minute we were looking at it before. So on the 3-minute, we actually have a lower high signal printed on that STUBER fib target, basically. So, yeah, I would consider shorting if we get back up to this level. Basically looking for one of those. If I happen to catch that tonight, I would consider throwing a little one at it like that. But again, kind of fighting the 1 hour trend a little bit. So I would be a little bit cautious on my position sizing due to that. And also, if that ended up getting stopped out again, if we ended up breaking above this range, basically, at that point, I would consider just, I'm just going to pump the brakes a little bit and reanalyze and consider if maybe just waiting for some of those bullish pullbacks that I was kind of eyeing up instead. Just kind of adapting to the market, right? Yeah, what else? I kind of went over what I was feeling on the 4 hour already. Here, let me remap that out for you guys just so I can show you step by step kind of what I'm looking at. Basically, this was my low. We got a lower low because we broke below that, so I'll make that red just to show that it's bearish. Then I'll take another one from that low. We end up setting another lower low. And from there, we obviously set another lower low. So that's where you guys, I know that everyone wants to feel like, hey, we got a nice reaction. We got a nice bounce, therefore the bottom's in. That doesn't, just because there was a nice reaction rally, that doesn't mean that structure has changed. All at the end of the day, we just swept the lows and we got a retrace. So, and yeah, like I said, just where these rallies after we end up getting that structure break, right? So basically, here's our low, lower low. So that's where I pull my Fibonacci from the swing high down to the lower low. Where do we end up struggling and running into resistance? Right in that 786, Then from here, low, lower low, pull the fib from the highest point between the two to our lowest low there. Where do we end up getting rejected? Right in the 786 fib pocket. And that's where right now, obviously we have a lower low. So does history repeat itself and we get the same thing again? You know what? I think it's at least valid to consider the possibilities of running into resistance up here. That's the thing, right? Every chart setup has invalidations, and this is just one of those things that rather than, even if somebody, let's say some random people on crypto Twitter, whatever, let's say they get bullish at this level and we do actually break out this time. Yeah, but how many times did they FOMO into that same resistance level on the opposite end of things, right? So I just like to play the trend for what it is. I like to play the charts for the structure that's already there. I don't so much want to take a guess at what's going to happen in the charts and then try and plan like 3 steps ahead of that, because those things have not happened yet. It's good to have that, I guess, that plan in place. Like, you know, when we were trading at these levels, I thought it was very likely we sweep the lows and then get a big pullback and get FOMO going again and then nuke from there. That's exactly what happened. But you know what? It was good to have that theory on my radar, and it was good that I made a video about it. So just as a trade journal more than anything, it really drilled it into my own head. And yes, it played out that way, and it made it very easy to trade the market to the downside for that little bit. But the thing is, you know, things change. Market structure changes. It doesn't necessarily do what you expect it to do. So you have to be able to adapt. And that's why I say every single stream, it's way more important to be able to react than predict. Predictions are great. They help you keep a level head if they play out properly. But being able to react, that's where you're really going to see, you know, trader versus... and actually, so before I talk too poorly on... you know, trading fundamentals or, you know, getting bullish on news events and stuff like that, understand that a lot of time those things, like everything they're talking about with crypto right now and how that, you know, just more mass adoption, blah, 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 it is bullish for the space, but there's constantly bullish things happening to the price, or not to the price. There's constantly bullish things happening to the crypto space. It doesn't mean the market is going to react that way, is the only thing. It's constantly being built on. There's constantly new innovation in crypto, but we still have bearish trends. We still have bear markets. That's all there is to it, right? And something I'm actually going to touch on a very touchy subject right now. A lot of people are not going to want to hear this. And I honestly, I want to be very clear about this. I don't think this is going to happen, but anything can happen. The market does not give a shit about my feelings. Something that's on my radar lately, and someone else in the MDX ALGO group pointed it out today, is what happens if this is one of those things where all of a sudden we just make a massive range and Bitcoin never does blast, like, you know, just exponentially explode again, this market cycle kind of a thing. And I'm glad he said that, because something that's been in the back of my mind and I have not wanted to touch on, because again, I don't think it's a real thing, but it's always, you know, good to be ready for things just in case. Just because this signal is such a strong reversal signal with the RSI going from extreme over conditions with that, you know, just that bearish RSI divergence, we can see that it has been absolutely devastating in price in the past. And it's happened so many times. And every time that pattern with that exact divergence happens, we get a very significant pullback. Not saying that has to be the end of the market cycle, but that signal has called the end of market cycles before. It called that that massive 50% dump there. So that little warning shot, that same signal. And then the bear market was triggered by the same signal. Before COVID, we got the same signal in the charts. The bear market before that, when we topped out at 20K, we got that same divergence, same everything. So, you know, it has caused some big reversals. And when I traded on the 1 minute or the 5 minute or anything like that, I do consider that, you know, if I'm getting a double top and it has that exact divergence, I'm considering it that it's very possible that it's a full swing reversal kind of a thing. So again, not saying it has to. Anything can happen here. I'm happy to be wrong about this. But from a fundamental point of view, everybody wants bigger players in the space. Everyone's under the impression that, oh, BlackRock's getting involved. We're going to have ETFs. The governments are getting involved. All this. That's mass adoption. They're going to FOMO at all-time highs and pump our bags. For some reason, that seems to be the thing that everybody thinks or wants or hopes or needs or whatever. Smart money did not get rich by FOMOing into all-time highs of markets. Especially with leverage involved, they can manipulate the price. They can be market makers. They can really, you know, they're not going to buy your crypto from you at all-time highs. They will buy your crypto from you, but it's going to be when they make you panic sell. And they have a lot more patience than we do and all that sort of stuff. But back in the day when we topped out at 20K, I know there was news articles and stuff, and I had just got into crypto back here, by the way. I was totally a top of the cycle kind of a buyer, get into the market. I knew I was going to screw up, but I just started small just to get my feet wet kind of a thing. But I remember very clearly that, you know, stock market people, whatever you want to call them, I remember seeing articles, whoever it was, big players, smart money, saying that Wall Street was going to tame Bitcoin. And when leverage got introduced to the market, that did happen. I mean, yes, we still had a bull market, but this bull market top to this bull market top was 240%. The market cycle before we had those bigger players in the space, from market cycle top to market cycle top, was 1700%. And you know, I keep hearing people say that there's this wall of money coming. This cycle's different because bigger players are getting in the space. This is going to be a super cycle. No, Bitcoin is no longer one of those things that you can either buy or sell it. There's so many more levels to it now with the bigger players in the space, and it takes significantly more money now for the price to do anything. It takes an exponential amount of more money for these market cycles to get bigger and bigger. Yes, the dollar amount will go up drastically when those breakouts do happen, but it's going to be a smaller percentage every market cycle because it just takes way too much money to move it. And yes, even though there's the halving, yeah, sure, only half the Bitcoins being mined moving forwards. Yes, but there is still Bitcoin being mined is the thing. So there is still more in circulation. And it just, again, takes way more money every market cycle to move it. And now my thing with that is, and where I'm going with this and why I'm considering the possibility of, hey, maybe the market cycle doesn't get absolutely crazy. Crypto is basically 100% driven by speculation. Yes, you know, there's adoption, there's a lot of uses for crypto, but whenever we saw those massive parabolic runs, whenever we saw those massive market cycles, it's speculation that was pushing everything forward. How much speculation is there after, you know, BlackRock and governments and big banks and stuff like that? Now that all the biggest players out there are involved, what further speculation do we go from here? It's true that, yes, they're going to accumulate more over time, just like they do with stocks and everything like that. And yes, generally speaking, there's more money put into the system and things are going to climb. But it's just that, understand that the market cycles that we used to get, I personally don't think we're going to see those type of cycles anymore. I think they're going to be a lot smaller moving forward. And, you know, yes, you know, well, speaking of speculation, meme coins, right? Yeah, there's a ton of meme coins that are absolutely exploding. That's the thing, right? We are turning into more of the stock market. Meme coins are basically the penny stocks. Yeah, there's people getting rich on penny stocks too. That's just, you know, that's kind of just the kind of place where we're at, right? It's no longer Bitcoin. Like when I started trading Bitcoin, it was nothing to see Bitcoin move 20, 30, even 40% in a day. That was totally normal. Now you don't see that anymore. Now 1 or 2% seems like a big day. So things are drastically being calmed down with market makers and leverage and all that sort of thing in the space now, right? So that's all a bunch of stuff, like even 21 million Bitcoin in circulation. Yeah, but how many paper copies and paper futures and margin and leverage and just everything involved with the space now? There's so much more beyond what we used to understand with Bitcoin. So I know that's pretty heavy to think about, but that's something that I think is important to consider. Just like, you know, it's just, I don't think that's going to happen. I truly believe Bitcoin is programmed to outperform the dollar. And I do think governments keep printing money and it just kind of makes it go up over time. But it is something to consider, you guys, right? And I mean, this would be a big warning to me if this big reversal pattern does play out and we get a big swing reversal already, only, you know, barely breaking all-time highs. That's just right there. All of a sudden the market cycle, you know what? Yes, this market cycle's different. It can be different the other way is the problem. And a lot of people are not willing to even consider that possibility. only channel I watch now. I don't even attend the lifetime Discord I paid for. Nobody sticks to their guns like you do. Thanks for live streams. Oh, I love to hear that. Don't get me wrong. There is other traders that I do take seriously. I think there's a lot of good traders out there, but there's so much crap, especially on Twitter, that is just nothing but hopium and nothing but echo chambers, because those people don't actually trade. They get their money from having other people pump their bags, or just having the big audiences and stuff like that. And here, I'm a small channel. I keep it real with you guys. My thing is, I just look at the charts. I get baked. I look at colorful charts and I trade them. I keep my trading very simple, and a lot of people just want to overcomplicate things, but all-time high so early. Yeah, and like, honestly guys, when I talk about those crazy bearish theories, understand that I'm just talking about them as a possibility. I'm not saying that I believe that's what's going to happen. It's just that, understand that we like to think that we have an edge by, considering what's going on in the economy, and Bitcoin's going to be worth this because of this. But a lot of times we can't even read charts properly, and then we start looking for other reasoning outside of those. But then we think that we're not going to make a mistake analyzing the entire world economy. That's kind of my problem with that, and why I'll just stick to charts, because simple strategies for a simple guy. I just think that I never know how the market as a whole. I always understand that I'm smart enough to know that I could definitely be wrong when I'm looking at, it's just another thing I can misanalyze. Because I remember at the end of COVID, I remember thinking that this chart is insanely bullish, and I wanted to throw absolutely everything I had into it at these levels, because I saw us pull back into my favorite Fibonacci box. But I was thinking, that doesn't make sense. The technicals are there, but I think we're going to absolutely nuke through it, because we don't know who's going to have jobs. The whole world is shut down, etc., etc. This was a scary time. And it turns out that, yeah, after a while, you start to realize, hey, they're turning on a money printer, and all this is happening, and people are getting served checks, people are getting everything. And, absolutely it made sense that we moved to the upside. But at the time, we didn't know that. There's ways that most of us were probably misanalyzing the market at this point. And not because the charts were tricking us or anything like that, but just that understanding the whole world economy can be a very complex thing, right? This cycle, the narrative will be politics. Yeah, like, the only thing with that is, again, I'm not so sure that they're necessarily going to pump the market for us. I mean, we're just going to have to see what happens. At the end of the day, that's all there is to it, right? As soon as we break the bearish market structure, I will shut up about my bearish theories. And also, you guys know, like I said, I only sold a very small bit of my spot positions, and I was more so trading the downside as a hedge. I'm still very bullish on the space. I love using Bitcoin. I move Bitcoin around every day. I trade it every day. I use it all the time. It's a very good system. I love everything about it, basically, compared to the traditional banking system. But I also understand that, anything can happen to the price of it, basically. There's been many times throughout the years where I've thought something was going to happen in my gut, and then the charts just end up doing whatever they want anyways, and my opinion just doesn't matter. So that's basically why I keep everything quite simple, and I just stick to some basic colorful lines, basically. And yeah, like, on the grand scheme of things, like, Bitcoin is still a relatively small market cap. I totally agree that it can still go much higher. I do want to be clear about that. I am a strong believer in Bitcoin. I do think it will go a lot higher, but just understand that realistically, the market cycles are probably going to get smaller. Volatility over the years will slow down. And that being said, guys, as a leverage trader, all that means is when volatility slows down, I'm just going to use more leverage. You know, just like Forex, they're really not that volatile of markets, generally speaking. But I'm pretty sure isn't everything basically like 100x leverage right out the gate kind of a thing. That'll just be crypto. Eventually, it's going to get very low in volatility, and then I'm just gonna crank up the leverage a little bit to make up for it. So it's fine. I really, honestly, the great thing about being a trader, and especially someone who's comfortable trading the upside or the downside, one of the most satisfying things for me right now is I truly do not care which way Bitcoin goes. If it goes to the upside, yeah, you know what? That's going to be fantastic. It's always fun to be a part of a bull market and have your assets going up like that. But on the downside, I mean, those markets move so fast to the downside so often that, man, like shorting is so fun. And there's a special feeling when you're making money on the way down as well. Panic is a very strong emotion and it can be very profitable. So I really don't care which way we go. I know a lot of people are very upset about what's been happening with the price action. Now they're going to be over excited for a little bit, and if we set a lower low or a lower high and nuke again, they're going to be, you know, depressed again and stuff like that. None of that for me. I look at this, but you know, after you've been in this market for a few years, it beats the emotions out of you. Let's be honest. I would agree that I think the money printer is going to get turned on before the election. And I do think that's basically what I'm expecting, honestly. I do think around election time, Bitcoin will probably end up, and this is all a theory at this point. There's nothing backing it up in the charts, just a gut feeling. I do think Bitcoin will hit all-time highs around the election or just after or something like that. But I don't think it's necessarily going to last. It's really tough to say. I'm very okay just reacting to the charts. You know, as we set higher highs and higher lows on something like the 4-hour, then I'll remain bullish if we keep trending to the upside. But as soon as that breaks, I'm going to be open to the possibilities, especially if we get these big overextended divergences again. I'm going to be very open to the possibility that, hey, maybe that's it. Time to de-risk a little bit. That's totally fine. You know, I'm okay selling some of my spot position up here, like I did about a month ago, you know, because I was buying down here. I'm okay with that. I, you know, just like any leverage position as well. I have no problem taking profits along the way. I'm very rarely in a position where I'm all or nothing, you know, like, oh, I have to close this entire position. No, I like to nibble profits on the way. It totally takes the emotion out of it for me. Yeah, that's a very good point. Nvidia went absolutely nuts not too long ago. So yeah, that's the thing. I don't want to sound too bearish. Like I said, those are just theories at this point. They're just things to consider, right? That and that's the thing. Like it's still very possible to get like a 10x out of Bitcoin, for example, if you bought the market cycle lows. I don't think we get a 10x from all-time highs, because, you know, if last market cycle to, or 2 market cycles ago to last market cycle only got a 200%, I really don't see this market cycle getting something bigger than that. Generally speaking, every market cycle is going to get a little bit smaller percentage wise. It would be weird to me if we just absolutely exploded and did like a 500% move to the upside this cycle. I would find that very strange. With the amount of money printing and free money and all that sort of stuff that came with this parabolic run, like what's it gonna take to, first of all, do that again, but also doing that after we're already at all-time highs? Yeah, absolutely, Sam. You have to consider current market in order to trade it. Excellent point. History often rhymes because it's human psychology we're talking about here. And honestly, actually, I'm going to show you something interesting. Speaking of psychology and being Fibonacci's are the perfect way to look at that. I'm going to come back to that in a sec here. 1 minute chart getting spicy. Oh, I'm going to have to dive back into it in a second here. Yeah, like with the election stuff and Bitcoin actually being in the spotlight a little bit, I totally agree. Like, that's the thing. I'm totally open to the idea that we do still get a parabolic market cycle. Um, I just don't know if it's going to be bigger than the last one, is all. Like, I'm definitely not expecting Bitcoin to do like a 10x from here, for example. Maybe a 2x, maybe a 3, but I honestly don't think so. But that's fine because honestly, like trading with leverage, hell, I had a 700% short the other day. Yeah, I'd agree that 10 to 20x from the bottom. I think probably, yeah, 10x from the bottom maybe. What did we get last market cycle? Last market cycle was about a 20x from the bottom. So yeah, I'd agree with that. 10 to 20x from the bottom of this cycle if we end up going. So yeah. Yeah, we could end up at some pretty high targets if that happens. But again, I truly believe that this market cycle will be smaller than the last one. But yeah, I absolutely think it's possible we still get a nice bull run and stuff like that. Just as it stands right now, like the 4 hour chart is still just showing lower lows and lower highs. So once that breaks, I'll change my tune. I do agree with everything you're saying, honestly. I'm just basically playing devil's advocate and trying to just basically, if something unexpected happens, I want to have a reason in my own head rather than listening to what the media is going to tell me, right? I want to be able, basically, if I'm ready for that and it's like, hey, there's going to be a lot of people who at the end of the market cycle say, no, that wasn't big enough, that wasn't long enough. And I want to be one of those people who can react and be like, hey, you know what, the chart structure did just flip bearish, and yeah, maybe these are some of the reasons why it's not going as far as I want. That's more so the approach I take with those theories. It's more of a risk management thing rather than how I'm going to trade the market specifically. Do I use the same strategy for alts? I don't trade altcoins very much. I kind of got a sour taste in my mouth with that one liquidation I told you about. And that was just simply because, like, I know I double and triple checked that exact trade I had on the go at the time. And I know my stop loss said, like, I was going to make, I think it was like 5% profit. And I got liquidated on that position because slippage happened because there's thinner order books on altcoins and stuff. Yes, most higher up altcoins, you're not going to have that issue, but it just kind of scared me a little bit. I like to more so focus on one chart. We never quite got up to that level I was hoping for. Yeah, basically, I just like to look at one chart too, just because I can focus more. I find when I start bouncing around between different charts, I start to forget what I was looking at. And honestly, I also look at altcoins like Bitcoin with leverage. So rather than trading alts, I'll just trade Bitcoin with higher leverage, basically. Spot, I do have some. I have some random coins and stuff, but and I will take the odd trade. I'm just more comfortable with Bitcoin is all. Oh, nice. Okay. Yeah, welcome to the group. It's always nice seeing new faces. Am I going to take any trades for now? I was waiting to get up to this fib up here to swing at a short, but it pulled back a little early there. yeah, basically all I'm looking for on this one is just pulling. And I, at the start of the video or earlier in the video, I did take a setup on one of these on the 1 minute, and it did fail. So understand that every trade setup can lose, right? But basically what I'm looking for is on the 3 minute, we have this lower high signal from the auto charting tools. Oops. And basically looking at that for a place just as confluence that, hey, you know what, we had, that's from this high that we had of the range with our fib pull like that. You can see we got rejected in the STUBER fib pocket, and that created a lower high at that level, just like what I've been looking at on the 4 hour, honestly. And then now I can pull a fib from that lower high down to where we've currently bottomed, and I'm basically hoping to get an entry on a short up in this pocket. If that gets invalidated as well, I'll probably just I'll probably stop trading for the evening. It's almost time to go and eat and stuff like that anyways. But that's kind of what I'm looking at for now. So right around that 56.6K, just slightly below that for starting an entry. And usually, just like what I said earlier, I'm usually not an all or nothing guy. I don't close entire positions at the same time, just like I usually ladder into positions to try and help my average entry. So in this type of a setup, I'd be looking at putting like a quarter to a third of my position basically just below the 786. And then I'd be looking at entering 3/4 to 2/3 of my position kind of at the double top area, and that'll just help basically. And that's not doubling down, that's not tripling down on my position, guys. That's breaking a position up. It's risk management, not just straight up risk. And basically what that would do is just, if I am going to get stopped out, at least I've tightened up my entry a little bit, right? My average entry will be up here rather than down here. And if it ends up playing out and I get something like a double top like that, then I just have an even better entry, more profits, etc. So just a little bit of risk management for how I personally like to look at those trade setups. But everyone trades differently, right? It's important, like, do what works for you. Do a bunch of back testing. Find out what catches your eye when you're trading. Oh, I just remembered something that I was watching for on the 1 minute happened, and I missed it. Remember with that structure break? Why I flipped bullish before, briefly. I was looking at something like that. We got very close to the 786 there, and we also got very close to the range target there. So as far as the scalp setup, that's actually already played out. I missed it. Whoops. Got sidetracked on the on my rant earlier a little too long there, but yeah, that would have been it's a very small setup when you're looking at something like that. The thing is, when I'm taking these STUBER fib setups, they're very structured. They're looking for a range play, right? Because the market generally ranges way more than it's trending. And yes, in this case, if it's going to be a very small profit, you know, you're looking like at this kind of a setup. Obviously, I'd let some of my position run, but I would start taking profits there, basically. If that's too small of a range and that's not enough profit for you for that kind of a setup, then you're just trying to play too small of a range, right? If you're looking for like bigger moves, they just don't happen as often, right? But we had a beautiful one at the reversal when we bottomed out the other day. Just look at this beautiful entry here. I can eyeball it from here where we bottomed out. Pulled into that fib pocket, absolutely pinpoint. That was such a beautiful entry. I happened to be sleeping when that happened. I caught the beautiful short on the way down. I rode this whole thing out the night before, but I was also out getting drunk. So the next morning I woke up a little late and I missed this entry. That's tough luck, right? But it was still a beautiful setup. That's just an ideal setup. But that's more so like, yeah, the same strategy basically, right? You're still just looking for where would there have been a structure break of some kind. Yeah, basically we could say right here we have this green candle because we had this lower low. Very micro analyzing here, guys. But as far as looking for some sort of a reversal, we did have some kind of a structure break there. And that's where I just start basically pulling a Fibonacci with the price, right? Just basically from low and just chasing the price and just waiting for it to come back to that 786, 886. And eventually it did, right? And that was an absolutely phenomenal entry if you were lucky enough to catch it. I honestly assume that some of the MDX Algo legends did probably catch it, because I know a lot of you guys are starting to point these out to me now. So yeah, just a beautiful bottom there. And yeah, like I said, unfortunately never caught a hedge there, but I am open to the idea of pulling back towards that area later, hopefully. And if not, whatever it is, what it is. But that's just an example of how that strategy plays out, right? Pulling back to those fibs, beautiful entry. That range target would have been a lot nicer because it was a bigger range that I was looking to play in that case, right? Well, not me personally, but I would be. Is that obviously this is just a little bit of a bigger range. So that was actually a very nice profit for anyone who did get in there. That's a 5% move to the upside just for the range target because things were so volatile. I mean, that was over a $2,000 move. That was a $2,500 move in a matter of minutes, basically, if you got into that entry there. Beautiful type of setup there. Thanks for joining, Cause. Catch you next time. Yeah, Sam, trading is better with all charts and no news. Just trade the chart. That's the way it is. Pretty simple. Yeah, I agree 100%. Oh, Sam, we were talking about emotions before, and I had mentioned that I had something to touch on with that. Check this out. Just to show you guys how often that 786, 886 fib pocket happens, and that type of a setup where you get, you set a higher high, for example, and then you end up pulling back to those levels, whatever. Just watch how often these, right from the beginning of Bitcoin's time. This is why I love that 786, 886 so much. And yes, this is a weekly chart, you guys, but I see it play out all the time. You get this even a big scam wick like that on the very beginning of Bitcoin's trading history. Look at that. We pull back, we find some support along that fib level there. We did come back lower, obviously, like a double bottom, but still you can just see there's that obvious level of interest there. Same with pulling from that little low, basically just looking for any macro structure, right? Pulling even this range, right? We pulled that 786, 886 fib pocket. The bottom of this market cycle, from the bottom to the top, we got very close to the 786 there. Where else? So you just start to see them absolutely everywhere. 786, boom, absolutely perfect. I don't know how many of you guys were around for this. I was around for this market cycle. This was actually one of the first shorts I ever took, was this absolute nuke from the descending triangle. But just look at how this bottoming pattern happened here. Boom, 786 fib pocket. Let's go even bigger. Do something like this. Pull from that range. Boom, 786, 886 fib pocket. Back here, we had this little structure here where we end up going to. Yeah, it ended up being more of a double bottom, but 786, 886, a lot of confluence right there. Just a lot of trading happened in there, and we hit the range target. Where else can we find them? Let's say the bottom of this market cycle. Look at that. Boom, 786. Up here, we get this structure break. We set a slightly higher high. Boom, pull back, double bottom, but same thing, right? 786, 886, beautiful entries there. So you just start to see these absolutely everywhere. And yeah, that's just obviously at a quick glance, right? That's just eyeballing it. And you can very easily see that they just start to appear everywhere. And that's why I've been showing these levels so often on my channel, right? On these streams, I always focus on these 786, 886s, and that's kind of why. But yeah, basically my point on that is that human emotion basically plays out the same, right? Fibonacci's are basically measuring how people react to price action, and that's just human instinct. That's just our instinct basically runs around the Fibonacci's, and it's kind of a self-fulfilling thing. And yes, market makers now use those levels and stuff like that, but it basically revolves around human emotion. So yeah, just going back to that topic earlier about people repeating the same habits, the same patterns and stuff like that. Oh, starting to backtest the Stuber fibs. And yes, excellent approach. Thank you for doing that rather than just pulling fibs and maybe doing them wrong and just blaming me kind of a thing, right? Because I have seen people post chart setups before and be like, oh, check out this Stuber fib. And then when I look at it, I'm like, oh, there's actually no structure break there. That's actually technically not a Stuber fib. Although it's a 786 fib pull, it might not be how I would be pulling one kind of a thing. So that's why I always say everybody looks at things different, and it's so important to do that backtesting. Before you're trading with any real money, you should always backtest and kind of find out what your probabilities are. You have a set of rules for a trade setup you're going to take, and you know your probabilities ahead of time, right? Dang, yeah, I totally missed that bullish setup that I was even planning on, or actually I had mentioned, yeah, I don't know if I would have taken it. I still think that, it's absolutely possible we push lower, but yeah, got very close to the 786 there and would have hit the range target by now. So whatever, it's way too late for that. But again, with the auto charting tools, it was the 3 minute. I was looking at the higher one. Think, yeah, that's the one I was looking at basically. And that's the beautiful thing with these auto charting tools, right? Just basically pulling my fib from my lower high down to my lower low, just basically points out where I'm supposed to pull my fibs from. Love having these indicators for that. It's just basically a life hack. For those of you who are interested in these indicators, I do have a link down below. There's a 10% additional discount on top of current promotions if these do interest you at all. That gets you access to all these indicators. Like the ones that I'm using, that I'm showing, are just a very small handful of them. There's actually this whole big list here, all beautiful. I only use a few myself just because I haven't had time to go through them, honestly. And also just I don't want to have too many things up on my charts anyways. I like to keep them pretty clean. But yeah, very cool stuff in there. And as well, I think personally, even more than half the value there is also access into MDX Crypto's VIP, the MDX ALGO Discord community. So many helpful people in there. There's 2 or 3 live streams every day put on by coaches like myself and also a handful of others. Very good traders in the group. Everyone's super friendly, super helpful, very awesome community to be a part of. So I honestly think over half the value's there, but obviously I do use the indicators as well. Stu, I'm a new member to the group. Is there a manual to my strategy? No. Honestly, I was thinking about making a video specifically breaking down every way that I look at Stuber fib setups and that sort of thing. But if anything, it's going to be probably more for like the people that I'm doing mentorships with. But I honestly don't know if I'm even going to keep doing that all too much. I kind of like doing the live stream thing with everybody. But yeah, I just kind of it is just what I show on my streams. Basically, I just show a ton of examples of how I look at structure because it's always changing, right? Especially on the 1 minute, it's changing so fast that's where I really like to hop into these live streams and show like, yeah, kind of reacting to the price as it happens, right? Because the 1 minute chart 10 minutes from now can be a very different story than it is right now. Yeah, there you go. 100% MDX is amazing. Yeah, absolutely. And I see a bunch of faces, like most of you guys here with me right now are probably from that group, honestly. Yeah, such an awesome group to be a part of. Yeah, this is taking a while. I don't know if we're going to get there. As it stands right now, this is kind of where I'm targeting to enter a short if I can this evening. If I'm even looking at the charts when it happens. But I'm getting hungry, guys. I think I'm going to take off here. I was only planning on being live with you guys for like 20 minutes or half hour, so I don't know how long I've been live here. But yeah, anyways, I am getting hungry, so I think I'm going to take off here. First of all, thank you guys all so much for tuning in with me. Love having you guys here. Hopefully you're taking something useful out of these, the way I look at structure or Fibonacci's or how I use the indicators, all that sort of good stuff. Like I said, for those of you not in the community, there is a 10% additional discount down below if that's something that's interesting to you, these indicators and that VIP Discord group. Other than that, you guys, I'm personally doing most of my trading on Blofin these days. It's no KYC exchange. For those interested, I've maxed out the cashback on my affiliate link, so you actually get 20% back on your trading fees. So if you need a new non-KYC exchange or just want to back up in general, check out my link down below for that. And with that, I'm out. Stay safe, my friends. Thank you all so much for being here. Don't forget to hit that like button and subscribe if you haven't. Peace out, my friends. Stay safe.